Good Thursday, everyone. This is Mike McCleary, and on behalf of Marine Money, it's a pleasure to welcome you to the second of two webinars we're hosting today that comprise our virtual Norway Ship and Offshore Finance Forum. And welcome back for those of you who are on the first webinar. Great to see you again. Originally to be held in person in May, optimistically rescheduled for in-person in September, we have finally arrived. And before we begin, a few logistics. All attendee microphones are muted to optimize the quality of the audio for everyone. Attendees may ask a question via the chat box at any time. I will assemble questions and ask a subset of them after the discussion concludes. Feel free to direct them to a specific speaker if appropriate. The chat box may be collapsed and expanded by clicking the orange button, the orange arrow button. We anticipate 10 minutes or so of questions following the discussion, which will be 25 minutes or so. And with that, it's my pleasure to introduce our moderator, Ho-Yoon Nam, partner at Seward & Kissel, primarily devoting his time to the representation of financial institutions and borrowers in connection with bank financing and restructuring transactions. His experience includes other corporate transactional matters, M&A, private equity, and joint ventures. And with one of the largest and highest ranked hedge fund practices, Seward & Kissel is particularly well positioned to assist funds in getting involved in shipping, with both fund and shipping expertise in-house. In a recent discussion, Ho-Yoon shared increasing interest level he's experiencing on the part of all these clients in regard to ESG factors, including recycling. Of course, this is music to the ears of Marine Money as we seek to identify critical issues that can facilitate or obstruct capital formation and share them with the global ship and offshore finance community through our publications, gatherings, both in person and virtual, and bespoke advisory services. Ho-Yoon, thank you for your expertise and support and for leading today's discussion.
Thank you, Mike. Hello, everyone. It's great to be here. I'm here today with three distinguished panelists, Stefan Vetter from KfW Bank, Knut Ola Skavet from DNB Bank, Joachim Nehem from the Governance Group. Welcome, everyone. Would each of you want to introduce yourselves and your institutions? Maybe start with Stefan.
Yeah, definitely. I'm Stefan. Hello, everyone. Good afternoon, Norway. Good morning, New York. It's great to have this conference today. I'm located in Frankfurt. I'm a vice president at KfW IPEX Bank, responsible for origination and structuring of ship finance deals. And yeah, our organization is well known, one of the largest ship finance banks. I'm very focused on European deal transaction. So we try to support the European ship owners, the European suppliers, European shipyards. And yeah, I'm very happy today to talk on ship recycling with you guys.
Ola?
Yeah, hi there. My name is Knut Ola Skavet from DNB Bank of Norway. We've been in ship finance for decades, active participant in the field. It's now under what we call ocean industries, where I spend my time on various subjects, but quite a lot of time on important ESG issues in the shipping industry.
Joachim?
Hello, everyone. I'm Joachim Nehem. I'm a partner at the Governance Group. We're based in Oslo, so we're hoping to see you in person maybe next year here in Oslo. So the Governance Group, we're an advisory on kind of all things related to ESG, strategy, reporting, disclosures, and we do particularly a lot of work in the shipping ocean industries with helping companies disclose material information on ESG, as this is one of the topics we're going to be discussing. And we are 12 people who sit here in Oslo, and also some affiliated experts on other sites.
Thank you. So ESG, which of course stands for environmental, social, and governance. We're going to talk about ESG in general, but more specifically, ship recycling. and what that means for any ship owner trying to raise capital. Perhaps we can start with the basics. Joachim, why ESG? Is ESG something we care about because it is what's good for the world, or is it actually good for your business?
Well, I would argue both, in that I think we're seeing, an increase in executives, independent of industry, leaders in business committing to this, because it recognizes that the current approach is not sustainable in terms of planetary boundaries, in terms of climate change. So there is, of course, a strong, I think, normative commitment coming from especially businesses, and this has traditionally been the domain, I think, of governments. Like the UN goals on this have typically been governments, and we've seen this huge embrace from businesses around the Sustainable Development Goals. But of course, there's, like with business, there's a strong self-interest here, in that if you want a ticket to trade, if you want a license to operate, if you want a license to manage funds, it's increasingly being connected to ESG requirements and expectations. So what we're seeing both for corporates and investors, in that it's going from what was maybe nice to have, or some kind of expectation around CSR, corporate social responsibility, to a must-have, and it's becoming a lot more concrete in terms of what you need to have in place on ESG. You can't just pay lip service to it. So we're seeing a lot more tangible, if you like, approaches and outputs expected from companies, including on the topic that we're going to discuss today. So in short, I would say it's going from nice to have to must have. It is both a normative commitment and it's a self-interest, in that you are likely not, you will struggle to find investors and funds and basically be part of the game unless you have anything, unless you can say something sensible about ESG and how you manage it as an organization.
That's fascinating. Knut Olav, from a capital provider's perspective, why do investors care about ESG? What's in it for the banks?
Well, it's I think it's a little reflection of the same that Joachim was alluding to. It's both for the common good or for our common future, but also it also would provide a lot of business opportunities going forward. And it's also about managing risks, which we are supposed to be good at in banks. So sometimes they relate very closely to risks that don't always show up in a traditional financial analysis. You have to kind of think slightly longer term. So it's both a risk and protective element to it, as well as a long-term business prospect element to it.
I see. Stefan, obviously, COVID is on everyone's mind, still with cases rising again all over the world. In light of this health crisis, is ESG still well and alive, or do you think that maybe it's now taking a back seat a little bit as people are more focused on what's in front of them?
Definitely, it's still in our mind, yeah, and this development will continue. Yeah, I think the ship owners are doing a lot already, yeah, and they understood there is a change and the industry needs to change. And we, in the next minutes, we will talk also on ship recycling, and the ship owners also realize there is no contradiction between like doing green activities, yeah, and thinking a little bit more green and more sustainable, and achieving good P&Ls. Yeah, I think that's if you order, for example, a fuel efficient ship, yeah, then it's also good for your wallet. Yeah, then you save fuel costs. So this sustainability will continue, and of course everybody is worried on COVID at the moment, but I think this trend which has started some years ago will continue, and I think it will even get stronger in the future.
That's very interesting. Narrowing down the topic a little bit, ship recycling, or breaking down an old ship, is not an easy endeavor, and there are a lot of ESG concerns depending on how you do it. KfW and DNB are two of the members that signed on to what is known as the Responsible Ship Recycling Standards, RSRS. Maybe Stefan, would you want to give a brief introduction on the RSRS? Who are the current members? What are your goals?
Yeah, definitely. Maybe also give you some background on the initiative. I mean, bankers and everyone in the shipping industry, we love new vessels. Yeah, we love going to fancy ship christenings. Yeah, drinking champagne and celebrate. Yeah, at least that was the case before COVID, and hopefully it will be the case after COVID. But this is not everything. You know, the lives of a ship is longer, and as the death belongs to us, belongs to a life of a human being, the end of a ship also belongs to the life cycle of a ship, and especially the ship recycling. And so fortunately, some years ago, this whole sustainability issue in shipping, together with transparency, was increasing. And probably there's no better example really to than beaching or dirty scrapping to illustrate that it was time for the industry to change in some respects. And of course, we're bankers, we're not scientists, we're not technical experts. But when a banker Googles vessel scrapping in Southeast Asia, and then even a banker recognizes, okay, poor recycling standard cannot be classified then as green or as sustainable, and also not as reasonable. And it's bad for the workers there in these unsustainable shipyard facilities. And it's of course bad for the environment. And someone always has to take it up. Someone has to start. Someone has to fight for it. And we are really glad that our friends from some Scandinavian and Dutch banks really started with this, started the discussion on these topics, because it was so obvious that this is not sustainable. And they also took the discussion with non-banking institution. And then the decisive question was, how can banks really effectively try to have an impact on ship owners' decision when it's on ship recycling? And it's the best way to start the discussion during a negotiation of the loan, because then you talk to the ship owner, then you discuss it, and then you can bring up this topic. And that's why the initial RSRS members, they compiled some ship recycling clauses for implementing them in the loan agreement. And so what are they about? It's very easy actually. Yeah, it's that the financed vessels will be recycled according to Hong Kong Convention or European Union standards, and the vessel need to have an inventory of hazardous material on board. Yeah? And additionally, also the RSRS members, they commit not to finance cash buyers or unsustainable recycling facilities. Yeah, and we're really glad that the RSRS initiative has already 10 banking members. Yeah, and we want to grow. We want to invite banks from Asia, from the Americas to join the initiative, and to get these clauses in as many as possible loan agreements. Yeah, and to have as many banks joining this initiative.
Certainly, the shipping industry has come a long way since the RSRS were first introduced, I believe, in 2017, when ESG wasn't such a widely known concept. Since then, there have been other initiatives like the Poseidon Principles. Maybe Ola, have there been other recent developments on the RSRS initiatives that you can share?
Yeah, at least I could share some, what's happened over these 3.5 years and how I think about it, and also share some experiences talking to clients about it. But first of all, we need to give some credit to the 3 Dutch banks that started it all. It was ABN AMRO, ING, and IBC. And I'm happy that DNB was the first non-Dutch bank to join. So it came out from the Netherlands. Started as 3 banks, and it grew gradually, and we are now 10 banks in the group, kind of weighted towards the north of Europe. We would like to see it spread further, but it's good to see that it's although we are, say, only 10 banks, it's becoming more or less, these clauses are becoming more or less a kind of market standard in most syndicated facilities, at least in Europe, which we are very pleased about. So there are many, you know, even if there are not RSRS banks, there are RSRS supporters among the other banks who are glad to have these clauses in the facility. When we went into this, we went into it fully knowing that everything was not perfect in our portfolio. There were obviously a good spread in the practices among our own clients. We're fully aware of that, and that's what we expected. So we're already very good, but some have to admit we're perhaps lacking with respect to their practices. And I'm very happy to say that I think although there still is a spread, by all means, that's no secret, I think we can safely say that the median client or the average client has come a long way in doing it the right way. We are engaging clients in good discussions. We are getting the clauses into the loan agreements. And, you know, one thing are the clauses themselves, but the kind of whole idea, one accepting that ship recycling is a part of the life cycle, as Stefan said, that you know, we wanted to take informed recycling decisions based on due diligence, that you have to actually have a view and you make some necessary investigations, and hopefully follow up, and even better if they can develop policies and be transparent about it. So after 3.5 years now, we are gradually reviewing our experiences and our successes and the potential non-successes. I think we started out maybe getting these clauses into it. It's all on a best efforts basis, you know, into maybe the majority of the new transactions. I'm very happy to see that we now managed to get into almost all transactions. And you talked about earlier whether there has been any transactions that fallen apart because of ESG considerations. At least I can tell you that we have walked away from transactions where we've not been able to get that clause in, where clients have the client have been reluctant. So there is a clear movement, and it's also important, of course, to see this in a broader context. We're not doing this in isolation, and we shall not take all the credit for things going the right way. Maybe you can take a little credit, but you know, of course, there has been some very vocal institutional large investors out there pushing it. There's been even more media attention. There's also some quite interesting development when you look at recycling itself, the recycling market, the capacity for responsible recycling. There's been development on the regulation side, etc. So it's going to, all these things together make a certain momentum, and kind of so that everything gets more traction. So I think overall we are in a better position than we were 3.5 years ago, which may not always show up on the statistics, but because we have to admit, you know, in a ship finance forum like this, that, you know, one thing are the traditional ship finance banks dealing with a certain universe of clients, but there's no secret that there's a kind of two-tier market. So I think there are still a lot of shipping companies who are below the radar of the traditional ship finance banks and below the radar of the large institutional investors. And unfortunately, a lot of the vessels coming from these companies still end up on the worst beaches. Engaging clients on this is, you know, it could entail some interesting discussions in the beginning. I think it's easier and easier. And you know, we're extremely concerned with kind of telling that we're not asking the impossible. We're actually trying to be quite reasonable. You don't have to go from A to Z immediately, but you know, start doing the right things, think in the right direction. And I think we get a kind of increasing acceptance that this is actually doable, and doable at a cost which is not kind of totally prohibitive.
So we don't have an owner on this panel today, but Joachim, perhaps you can be a proxy. You know, what kinds of feedback do you get from your clients on these kinds of initiatives?
Yeah, no, to give a concrete case, we have a client, a publicly listed company, which was approached by both a bank, one of the banks part of this ship recycling initiative. So this was regarding a loan and credit facility, but also by an investor. KLP, which is a Norwegian pension fund, a little bit less known than its sovereign wealth fund cousin, but is still a pretty significant investor and a pension fund that has been quite proactive on enforcing ESG requirements or expectations to companies where they are a shareholder. So this client of ours was approached both by the investor and the bank. The bank first, in terms of just setting up the credit and loan facility, like Knut Ola was explaining, there are certain sort of requirements that need to be in place, clauses, and they basically need to have sort of confidence in that you have good routines on ship recycling and follow good practice. For the investor, what happened is they check on a something that's called a shipbreaking platform, which is an NGO initiative of trying to map all transactions of ships that end up at shipbreaking or ship recycling yards, and to look at who the previous owners were. So through this database, the investor KLP came to their attention that the company they were invested in, a listed company, that they had previously owned a ship that was now being recycled or at a yard that was not certified and that was sort of on their red list, if you like. So they expressed this concern to the company and saying, you know, how do you make sure that this doesn't happen? And it's the typical story of saying, well, you know, we sold this to another company via a broker. We didn't realize that we thought it was going to this country or this yard. We didn't realize it was going to end up here. But anyway, what happens is the onus is on the company to explain how do you avoid this happening in terms of the way you do contracting, in terms of the policies you have for ship recycling. So we worked with the company to come up with a public policy, and I think this is actually a good practice and important, is that it's not just about disclosing to your bank and your investor, it's to the broader shareholders and the broader stakeholders of saying, this is how we manage ship recycling. So we follow this normative standard, if it's the Hong Kong Convention, which of course has not come into force and can be a little bit soft, but you as a minimum follow the Hong Kong Convention. If you were doing business in the EU, it's obviously EU regulation. But then it's also about the management approach. What steps do you specifically take in terms of screening yards if you're going directly to a yard, or if you're using a cash buyer? How is that done? What type of clauses do you insert into the contract with the cash buyer? How do you monitor any scrapping taking place in a yard? What standards do you use, etc.? So the onus lies on the company, and I would say the ship owner, and the same applies to rigs also, it's not just ships, in that you have a management approach and a public policy that says this is how we do it, and this should actually be shared publicly. And so we worked with this client, and it sort of met the requirements, if you like, of both the investor and the bank. And I think what they turned something that was potentially a liability, because there's the risk of, in the case of KLP, has actually divested from shipping companies who they believe have too high risk on ship recycling. The Nordic American Tankers was excluded from their investment universe. They divested because of concerns on ship recycling and involvement in what they call illegal shipbreaking. So you can also turn this as a liability into something positive, and then go to others and say, listen, we're not just compliant, we're actually good at this. We have a policy on doing it. And this is the story of ESG, because one thing is to avoid being excluded from the investment universe. And I should have said initially that, you know, we're talking about $60 trillion under management that have some kind of ESG criteria. So the magnitude, if you like, of ESG investment has grown tremendously. But beyond exclusion, there are also asset managers who are sort of proactively looking for those who do this well, not just mitigating risks, but that also do something good by proactively looking for green solutions. So I think, you know, from our perspective, you can turn the liability into actually something positive when it comes to ship recycling.
I guess one question I may ask from an owner's perspective is, you know, what does responsible recycling mean? From a you know, bank's perspective, you know, is is a good faith effort to try to do this as best as you can. Is that good enough, or are you looking for something more stringent than that? Stefan, from a bank's perspective, what do you want to see? Not every vessel can be recycled in a modern dry dock facility for one reason or another. What is it that you're looking for from a bank's perspective?
I mean, and the minimum we are asking are, that's the one we are like agreeing with the client in the RSRS clauses in the loan agreement. So at least Hong Kong Convention or a European Union recycling standards, yeah. And I think for the owner itself, it's important that they know. It's important that I don't end up in bad press articles, and really try to have the best reputation which is possible. Because I mean, some people say, okay, bankers have a short memory, but I tell you, compliance departments and the internet has a long memory, yeah. And then these press articles come always up. So we are also not the final ship recycling experts, but as a banker, I can just recommend, please talk to the experts in the ship recycling industry. Yeah, there are really good ones which can help and be of support and do a proper due diligence. And if you have doubts on a buyer of your vessels, or if you have doubts on a ship recycling facility, then rather double check. Yeah, I think that's really important to mitigate your risk that you end up in bad press articles.
So from an underwriting perspective, is it a requirement for your institution to getting a loan that an owner agrees to these model clauses that you have developed?
I mean, as Ola said, yeah, we're really trying hard. Yeah, it's a yes and no answer. Yeah, as Ola said, it's best efforts. And so it's, first of all, it's a no, yeah, but then it's at the same time a yes, yeah, because we're really trying hard to convince the clients to include these clauses in the loan agreements. And believe us, we're trying hard, we're discussing hard. We want to see, okay, what are your internal recycling policies, yeah? Do you have something which covers what we want to see? Then maybe it's not needed to include them, yeah? And we're really checking hard, and it's getting stricter and stricter.
So the topic of ESG, and this has been mentioned a couple of times, it's really hit home for me recently when I found out that an investor actually pulled out of a deal I was working on for ESG concerns. Is it really that ESG can now really affect the party's ability to get deals done? Ola, I think you mentioned this before too. Maybe Stefan, you have an example?
Stefan, are we? Yeah, I think so. It's the ESG assessment now goes into the overall credit assessment in banks. Previously, they didn't. There was only if it was a kind of very obvious reputation matter or ESG matters that you had to deal with. It was a part of the assessment, but otherwise you didn't really do an overall assessment. I think it's more or less now becoming standard that all corporate clients will undergo a certain ESG risk assessment as a part of the overall due diligence in the credit process. So, it weighs into capital allocation and client prioritization and whether you're going to do the deal or not. We consider whether it's high, medium, or low risk. And then we have some minimum standards. And when it comes to recycling, at least we have gone out publicly with an ambition that for all new shipping transactions in 2020, we shall have a recycling clause. At least that's an ambition. Whether we will be at 99% or 100% remains to be seen. But we are quite, as I said earlier, we are, you start doing it, best effort, start working on it, educating ourselves, sometimes educating clients, and things gain traction. You move on and you raise the bar. And today we would not enter into new transaction or a new client where you consider either didn't get a recycling clause in, to be very specific, or in general, if you're deeming the ESG risk to be too high.
Absolutely. Yeah, and I can also say, I mean, when we like to do a deal, we approach credit approval, we approach other approvals in the bank. We need to complete some environmental checks. You know, for example, we look into fuel efficiency of the vessel. Yeah, this is one check we're doing, and there are other criteria, and also the regulators look on it nowadays. Yeah, and it's really important for a bank to have a strong reputation, and no deal in this world is kind of worse to have a potential bad effect on your reputation.
It does. It really. Sorry, go ahead, Joachim.
No, I would just add in terms of the sort of cost perspective, because we discussed it with the client, you know, in that what yard do you use and what third party, if you're going to have verification, what type of third party do you use? And there are cost implications here. Those with good reputations as yards and third party verifiers tend to cost more. So there's obviously a cost question here in terms of, you know, are you going to make money on the ship recycling? Are you going to break even or loss? There is a cost for ESG standards. But however, if you, based on also what, you know, Stefan and Knut were saying, there's a reputational, and at the end of the day, a probably larger financial cost if you get this wrong, because the price of being excluded, for example, losing KLP as an investor, they may only hold 2% as a shareholder, but they are an institutional investor. The market doesn't like if an institutional investor divests from a company. Your share price is probably going to drop even more, so that cost would be higher. But I would also add that there is, of course, there's some very practical and operational challenges from having this initiative, which is praiseworthy from the banks, and the same with the Poseidon principles, to actually implement this for a ship owner or for a company. And just to give one very concrete example, you could have the dilemma of that, you know, for example, some of the NGOs as well saying, no, it can only be at EU certified yards, and to date those tend to be in the EU, even though in theory you can have certified yards also in Asia or elsewhere, but mainly because of infrastructure issues, not what the yards do themselves, it cannot meet the requirements of the EU. So for a company that's looking to scrap a rig or a ship that's, you know, in Asia, is the alternative to then take this, transport this all the way to Europe to scrap it in terms of environmental damage, in terms of, you know, the risk of spills or something going wrong during transport, the fuel cost and emissions of transporting this across, you know, the ocean. What is sort of the cost benefit ESG analysis here also looks different. So there are both practical challenges and dilemma on top of this in terms of what one may want to see from the banks or what is sort of good practice. So it's not straightforward. I think all the panelists agree on that, even though you would hope that it was so when it came to ship recycling.
Can I comment?
Yes, of course.
Yeah. I think that's a very valid point, and I think it's when you kind of dive into it, you realize that responsible and sustainable ship recycling, it's not necessarily about geography primarily. It's more about the actual yard and the actual processes they have put in place to do it in an orderly fashion. There are so many nuances. This is not a black and white picture. At the same time, you can play with numbers and come out with some extremes cost-wise. You know, sending it to the worst beach in Bangladesh and getting a top dollar on the lightweight of the ship, or potentially sending to a certain yard in Europe and getting very little. But you know, there are actually very good alternatives in between. Although, you know, we all strive to kind of raise the bar and move everything in a better direction. I think you know, it's not up to the banks to decide yard and recycling method. That's the responsibility of the owners. But you know, we have realizing that there's so much positive change happen in certain yards, for instance in India. But given that you have proper procedures in place also to follow up, that you can get a decent, good recycling job done, given that you follow up and do the reporting and choosing the best yards, which is more than just asking for a certificate of compliance or statement of compliance with respect to the Hong Kong Convention, which is just a piece of paper. You actually have to look into the actual procedures and the actual yards, their equipment, etc. So, that's why I saying earlier, we're not asking the impossible. We're not asking owners to forego a huge sum of money. We're asking you to step it up, because you can get so much better results by just, for acceptable the difference in the proceeds.
Stefan, would you have anything to add on the practical challenges of being ESG compliant?
Well, I think Ola really very well summarized it.
Thank you. Well, I think, despite all the practical and financial challenges, it's clear to me, based on this conversation, that ESG is here to stay, and there will be an increasing focus by the investing community on ESG matters. I think we're just about to run out of time. Thank you to all the panelists for their great insights. I think we have a few minutes left for some audience questions.
Yes, this is Mike popping back in again to the screen. Nice, you guys, great job discussing. So we have just so many questions that we're never going to be able to get to them all, but it really reflects the interest in the topic. So why don't you guys try to be concise in the answers, and I'll try to do the same in the questions. This is to Stefan Vetter directly. Once you have the ship recycling clause in the loan agreement, what are the penalties if the borrower does not comply? And Ola, you could take that too if you want.
No, I mean, first of all, when it's during the lifetime of the loan, during the tenure of the loan, I mean, then it's it's an event of default, if they don't comply with the clauses, yeah. And as I said before, it really gives bad reputation if a ship owner kind of signs an agreement with us and needs to be bound to these clauses, and then the owner decides to do it in an unsustainable way, and then I cannot imagine that we would lend against the ship owner, yeah. And this is, I think, the biggest penalty a ship owner can get, that they have a bad reputation and don't get money from reputable ship finance banks anymore.
Great. Ola, anything to add, or you?
No, I think that's very precise. It's one thing is kind of the legal aspect. It's a clause in the loan agreement. It's an end of default if it's breached, etc. But so it's very good to kind of have your expectations to a client in a contractual form in the relationship. But it's really about, as we all know, ship finance, ship lending is not just random ship by ship. These are broad relationships between banks and ship owners over time, where you do a lot of repetitive business, and if you kind of disrespect that clause, you're not first in line when the capital is about to be allocated next time.
Okay, thank you. Another question: does a ship owner selling a 5 to 10-year-old ship have to commit to responsible recycling?
Yes. Yes, I mean, it's like absolutely. When, for example, I mean, you're referring to a refinancing deal. So also in refinancing deals over 5-year, 10-year-old vessel, we will ask for the RSRS clauses in the loan agreements, definitely.
Yeah. Okay, so this may be related in a way. In an environment where traditional shipping lenders do not finance ships older than 15 years at loan maturity and clearly prefer young and efficient tonnage, to what extent are shipping lenders really exposed to ship recycling?
Well, can I comment? It's another vessel in the fleet that we're not directly financing. And one thing is that we may not finance that ship directly. We may not have that clause related to that ship, but still, if you just abide by the principle with respect to the few ships we finance and do what you want with the rest, it's if you're going to have repetitive business, it's definitely an advantage and an expectation from our side that this is what we expect as a general rule.
Okay, and again, any of these questions, you don't have to answer any of them if it's found appropriate, which brings me to Joachim. Did your client take legal action against the parties who bought a ship and scrapped it contrary to the sales clause?
That's a very good question. So I think part of what happened here is that they, at the time, neither our client nor there was no breach of contract, but that the problem was the contract didn't have the right clauses. So in that sense, going forward, their policy and their way of doing business, it will have a different type of contract with different clauses, which would bind the parties to this. So that was the problem or the challenge. And I think the bank and the investor here was pragmatic rather than sort of retroactively punishing them. They said, we rather work with you and help nudge you to do this the right way in the future. So I think that's also a good and pragmatic way from ship finance to approach this, rather than punish for old sins, but look at the willingness of the company to change their ways.
Thank you. Another question. If a cash buyer only scraps at a Hong Kong convention compliant yard, why should the traditional shipping banks or RSRS banks not finance them?
Finance a cash buyer?
So if the cash buyer only recycles at a Hong Kong convention approved yard, why not finance them?
Yeah, for us, it's simply that's financing cash buyers is not financing. You know, we're into the business of financing ship owners and shipping activities. You know, it's far outside our strategy, so it's kind of
okay.
It's not within on our radar financing cash buyers.
Same for us.
In terms of the recruiting effort for more banks to join, what have kind of any objections been, if there have been objections, and are other banks, non-RSRS banks, have taking different approaches that to kind of reach the same ultimate objective for cleaner, better recycling?
I think, Ola, now it's a really good time to do some marketing for our webinar next week on Thursday. Yeah, all banks which are interested to get more know-how on RSRS and learn more about it, please contact us and we will send you invites for our webinar next week, and then we can go really into depth and tell you more about it. Yeah, but I think there shouldn't be objections. Of course, it's like maybe the fear to say, okay, our clients, they don't want it and we have to take up the discussion, and maybe they don't like it and we will lose some competition, some competitive advantage to other banks if we ask for more and more clauses. But I think, we talked about it more. It's this environmental sustainability trend will continue, and I think the earlier you start as a financial institution to think about it and talk with your clients on it, the better it is. So we can all just welcome to join the RSRS initiative. That would be great.
I think that's a very, very good point. It's we dived into this without, we didn't have all the answers. We knew we had dilemmas, barriers to change. We knew there was a spread in the practices among our own clients, but that didn't stop us for you have to start somewhere and start working on it. It's not like you have to be somewhat pragmatic, but you have to kind of find out how you can gain attraction and move in a certain direction. It's not every, sometimes you have to start looking into things without having all the answers, and you can investigate yourself to death to control the downside of it, but sometimes it's just fun. ESG, there's a lot of ESG issues in shipping, but arguably the two largest one is decarbonization and climate. How are we going to deal with that? That's a longer term issue, big issue, but the ugliest is by far recycling. And I hope I don't offend anyone to say that, the kind of value chain responsibility, looking at your supplier, etc., in an ESG perspective, maybe came later to shipping than in other industries, so this is an issue the whole value chain just have to deal with in some way. Start
Just
somewhere.
jump in very quickly, Mike. We often get the question of, does ship recycling belong under E, S, or G? So our response is it belongs under all those three categories, but particularly under G, because it's about what Knut Ola was saying in terms of how you as a company manage the supply chain, how you manage risk, how you manage your policies and your approach to this. So obviously, yes, there are environmental risks in terms of spills or hazardous material coming from the breaking, and there's social risks in terms of people being negatively affected by the breaking, especially at yards, everything from children to workers, etc. But it is at the end of the day a G question, because it's about the governance of the company and how you manage this. And I think, this is about the risk, but also about the opportunity. So life cycle assessment, which we've heard a lot about here, is also an opportunity, because the EU now, with its taxonomy, has identified the circular economy as one of the pillars of its green transition. So anything you can do to sort of help feed bits and pieces of your ship back into the circular economy, and this was the list of inventory that was mentioned in terms of trying also to strip as much as possible before you break the ship. There are incentives out there to sort of put things back in and not just discard them and get rid of these materials on a beach in India or Nepal. So the point is, or Bangladesh, so the point is there are also incentives there to do this right, to do this green. And there's also a punishment from the finance side, and this is maybe the greatest impact of the EU taxonomy, is that for finance actors, and this includes ship financing, if they promote things that are there called green and sustainable, but that are not aligned with the taxonomy, they can actually be punished. There are punitive consequences for greenwashing.
Thank you. Thank you for that answer. That is, I think that's a good, big, and cautionary statement to wrap it up on in terms of this topic. And I think that for banks that are interested, as Stefan and Ola were saying, there is a gathering next week, virtual, of the RSRS community, which you'd be happy to have some people participate in, as I understood. So you can let us know if you'd like to be introduced and facilitated toward that. Just let us know as we follow up an email after the session to you. So again, timing and definitely not a lack of interest or questions is going to lead to the end of this webinar today. I want to thank all our speakers. Thanks to all of you in attendance. We will send a link shortly that has the replay of this session. And as I said, we're happy to facilitate introductions between attendees and any of the speakers. Thanks again to BAR, Sword & Kissel, and KfW IPEX Bank for their support and leadership. Without them, this would not have taken place. And this is going to conclude our virtual Norway Ship and Offshore Finance Forum. We hope to see you in person in early June for our 23rd annual forum in Oslo. And in the meantime, the sun never sets on marine money. So please keep on the lookout for upcoming forums, in-depth analysis, market insight, and much more. Thanks again to all of you, and hope to see you soon.
Tusen takk.
Thanks, Mike. Thanks, everyone.
Bye-bye.